Here's our Forex blog for February 2nd, 2011. One of the things that we do and start each day with is, look at what currencies are strongest and which ones are the weakest. Underneath each individual pair or currency, the dollar, the yen, it shows a weekly and monthly trend. So the dollar's weak, and if we see some weakness in it today, we want to sell it against some of the stronger pairs. The pound has been one of the strongest ones over the last couple of days, and it reflects it right here. The weekly and monthly trend is very strong. The Australian trend's weekly trend is up. So if you see a lot of momentum here, you might look for some buys. And some days after a currency's gone up, too many days in a row or down too many days in a row, you might have a counter trend day. That's just bound to happen. On those days, usually the best methodology is to get into some, quick scalp-like trades where you make 5 to 20 pips, and you're not expecting those trends to continue. And if they do, you just make more. But most of the time they don't continue, and you have small scalping type profits. After the market resets itself after 1 to 3 days, usually the longer term trends resume, and they're a lot easier when you're trading in the longer term direction. So starting before midnight, the dollar was weak. The pound, very strong weekly and monthly trend. You can see it was strong last night. So there was some pound dollar opportunities by buying last night, and you can see the market was kind of going sideways right here. Previous day's high, because it's using the 5 o'clock close, and then when the market broke out of that NR pattern right here, you might have got in. This was a Fibonacci profit target level that I draw each night. It's also near the upper containment band, so you might have only made 20-25 pips in this trade. And usually fib levels, once broken, typically the market goes to the next one. So you got into that trade there, you made a little bit of money. I wouldn't have bought right here, right in front of this fib level, because it acted as resistance before, and I would have expected it again. But once it broke above there, usually it's going to work its way to the next level. You might have got in here on this little pullback right here. You would have lost on that because your stop got hit. You got in again, and the market shot up about 50 pips right to the fib level. And because the pound dollar's been up so much over the last couple days, these fib levels make excellent profit targets. I would have just flat out exited the whole trade right there. But you can see the daily, weekly, monthly trends up. There wasn't any off the charts statistical strength here, but once the market's above the hourly, NR breakout patterns tend to continue to trend. As long as it stays above this little tiny narrow range pattern right here, that trend's likely to continue. And of course our currency meter showed the pound stayed strong for many hours. You could have also traded the pound against the Australian here at 5 o'clock when it became super weak, or the Swiss, which also has a weekly trend that's down. There's a little bit higher odds at 4:30 buying the pound Swiss. Let's bring that chart up. Here's 4:30. Price is right hovering around the hourly moving average. 10 and 50-day moving average are here too, so it's not the best trade in the world because it could have selling here, here, and here right above it. But anytime you see it, hit a low, that low never got broke, that low never got broke, the daily, weekly, monthly trend's up. When it shoots up and it breaks out of this sideways range, hit this level 3 times. One of our systems is anytime a resistance area is hit 3 times and it finally breaks out, it's likely to continue trending, and you're trading in the direction of the longer term trend, you get in. Now you might have got out of this trade right here, made about 20 pips, kind of pull back a little bit on a tick chart. You might have found a nice little scalp there, and once it broke above the 50-day moving average, the next resistance is all the way up here. One of the lowest risk, highest probability trades was buying this little pullback right here and getting out of the trade right here. Anytime it's above the upper containment band, it's likely to stall and reverse pretty violently many times. But that was the highest probability trade, mainly because the trend keeps making higher highs. It's breaking through all this resistance, which there's usually selling there, and today there wasn't. Once the resistance area gets broken, it tends to become support. On this pullback right here, it didn't break that. Very high probability, 70% odds trade, and this is your likely profit target, which it hit, and you made about 40 pips on that trade. It's a shame that many times you might skip a trade because there's lots of resistance ahead of you, but once that resistance gets cleared, usually you have a high probability trade. Later in the day also, the market pulled back here, and this is our Elliott 2-wave pullback system. You wait, anytime it makes a big move, oftentimes there's a 2-wave pullback. Comes down to the fib level, kind of goes sideways right here, breaks out over these bars high, and our IntelliTrend bars go green. And I would have got into that trade, and kind of went sideways right here. I would have exited somewhere around 80. but that trade is worth about 50 pips as well. You can also see incredible strength here. Now, normally I don't like to buy near the highs, but anytime it goes sideways for about an hour, I would have bought here. Probably got stopped out, and then would have had to buy again here. This would have been my profit target, and if it broke there, here's my next profit target. So the pound Swiss was excellent trader today. And you can see the Swiss, a lot of weakness here. There was some strength here. That's during that two-wave pullback. Then it went weak again. The weekly trend's down. In this case, the weekly and monthly trend's up, and it had the most strength today. It's pretty much a no-brainer. I'm going to go over some of the other currencies and look and show you some trades. This one also was up quite a bit. Yesterday it had a lot of momentum. Today it went up to the weekly R2 resistance area and wasn't able to break it. Anytime the hourly gets broken and it doesn't cause a move back up in the direction of the trend, when it breaks the hourly the next time, usually you have a pretty safe trade right here. Here's your profit target. It's about 25-35 pips away. You risk 5 or 10 pips to make 30 pips. It's a high probability trade. Keep in mind the longer term trend's up, so you don't want to get greedy doing any kind of trade against the longer term trend. Yeah, we already showed the pound dollar. Dollar Swiss has a daily, weekly, monthly trend that's down. When this one rallied up and hit the upper containment band and the previous week's low, you might want to look for a counter trend trade up here. Usually, when you do a counter trend trade at or above the upper containment bands, it works its way down to the hourly moving average, which makes a good profit target. I probably would have got out of that trade somewhere between 60 and 70 right here. Short maybe at 85. So maybe only a 15-20 pip trade right there. But the longer term trend's down. When this kind of goes sideways right here and finally breaks the hourly right here, you go short. Here's your next support level. That's why we use support resistance as profit targets, because most of the time that's where you're going to find these trades stopping at. This one, the longer term trend's down, so when you had this narrow range pattern last night, you might have gone short here. Anytime you get short and you see almost no statistical weakness, even if the longer term trend's down, you probably just want to get out of this trade at the first sign of the bars going green. You wouldn't have made more than about 8 to 15 pips in that trade. The Australian dollar's trend's up, so last night you probably would have bought this breakout here and lost and bought again here. Did go up 10 pips the second time. Probably would have made 5 or 6 pips. And anytime a narrow range pattern breakout doesn't continue, this one also was a little bit overextended, went sideways for many hours, finally broke down right here. It's underneath the hourly. Aggressive traders might have went short right here around 07. This is a good profit target. I would have probably exited here because the longer term trend's up. And then when it broke down underneath there again, it went short again for a quick little 15 pip move. Support areas, once broken, tend to become resistance. So when it came back up here and couldn't get above it, go short again right here. And again, it came down to the lower band. There's almost no statistical weakness. The longer term trend's up. So you take your 20, 25 pip moves, when you spot them. And I probably would not have sold here even though that trade worked. If the longer term trend was very weak and down, any kind of move where it hits the lower band and rallies up, you want to sell. Here's a good example of what not to do. When the narrow range pattern is above the hourly, mainly you want to buy breakouts of the high. When it breaks down underneath there, it's not as much likely to go down. And so in this case, it's likely to find support here or here. The longer term trend's up, and that's all it went, is about 15 pips. When narrow range patterns don't lead to nice trends, you can see the previous week's high right here, major support. Decent place to get into the trade because the longer term trend's up. You might have made about 5 or 10 pips there. The second trade you got into, it went up about 20 pips. And again, when you see the currency not able to make a higher high, you might want to look for some sells when it breaks down underneath the hourly right here. Here's an example of the type of trade you want to do with a narrow range pattern. NR7 pattern right here, which means it had the tiniest 4-hour range over the previous 4 hours. Daily, weekly, monthly trends up. We're above the hourly. You buy the breakout right here. And this one didn't really lead to much. You might have made about 12 pips. Came up here. There's almost no statistical strength. You're right near the upper containment band. Don't let small profits turn into break-evens or losses. And you can see it just came up there. There's no strength. There's a narrow range pattern here, another narrow range pattern. You might have, if you're a scalper, went short here with the hourly moving average as your profit target. This buy right here is a very high probability one. because first of all, the first wave down, you draw your fibs on it, and then it hit the 1.618 fib target, also hit our lower containment band, and anytime these get hit at the bottom where the longer term trend's up, usually you have some major buying here. The longer term trend's up, so people would like to buy, you know, any kind of decent pullback in the market. Now this fib level right here is likely your profit target, so I would have probably got out when it went sideways here. I wouldn't have caught this extra 25 pip move up, and on the way up right here you can see there really wasn't that much strength, so I wouldn't have anticipated it continuing. But that's a decent 20 pip profit in that trade. Another perfect example of the narrow range patterns in action. Anytime you see two of them in a row, it's very likely to trend when it breaks out. Daily, weekly, monthly trends up. You get into this trade. You know, it kind of runs out of steam right here. I probably would have got out of that trade. The pound type pairs have been up a lot. You might have looked for a counter trend trade by drawing your fibs on this wave right here, and at or above the upper containment bands and our fib targets, you know, look for counter trend trades. This is a 200-day moving average, and it went up with almost no extreme strength. It's, you know, half of what we consider extreme strength. You go for short right here and make about 20-30 pips on the pullback. Here we have a narrow range pattern. The daily, weekly, monthly trends up. You went short right here, you would have lost. When it finally broke down again, here you go short. One of the reasons that this trade didn't work is because we have a support area here, fib level right underneath it, and the longer term trends up. You know, when it finally broke down, came back to the hourly, didn't hit it, you might have went short. You didn't make much on that trade. I would have avoided this because you have lots of fib areas here that are likely to act as support. Currencies tend to chop around when there's lots of fibs, you know, and so this fib area is likely support. You can't sell it up here, plus the longer term trends up. You might have considered buying here when it came down to that fib in reverse, but it didn't really move up much. This one fell yesterday. The longer term trend's down. You know, there's not a whole lot of statistical strength or weakness in this, so usually I avoid the dollar yen if there's no extreme plus 20 trend intensity pro strength or weakness. This one's also lots of fibs, and you can see how choppy it is. You can totally avoid unnecessary trades, losses. Very few people would have been lucky enough to make money in this trade because there's major fib levels. You know, this acts as resistance and selling, this acts as support and buying. The market just bounces around there all day. You know, maybe the only trade I might have taken if I, you know, I probably wouldn't have taken it, but the only trade that makes sense is anytime the market goes sideways long enough, finally breaks out, it's likely to go up, and it did go up about 25 pips, but it was a really messy and slow moving 2 or 3 hour move. Not worth your time.